Stock market weekly chart review for the week of December 19th through December 23rd, 2022. Before we get too deep into this, I want to let you know that in the description of this video, there's a link to ihavesuccess.com. You can go there, download cash secured put stock selection guide, 3 stocks I saw, cash secured put options on, stock option, Greek's cheat sheet, 300 use tactics to transform your financial results. The big two would probably be these two, which this one is definitely not it's not stock recommendations. More than likely these 3 stocks are not suitable for you, but what is suitable for you is learning how to make your own financial decisions for yourself so you don't have to trust the suspect opinion of other people. If that is something that might interest you, then you might enjoy I Have Success, because the mission of I Have Success is to help you begin your trading journey by learning how to sell cash secured put options in a way that allows myself to grow and improve in the process. You see, I want to help people learn about the stock market, because if you want to master something, and I want to master the stock market, teach it. And I truly believe that in 2022, going into 2023, if you have an internet connection, a bank, and you spend money at least once a year, there's no legitimate reason for you not to be selling cash secured put options on stocks that you wouldn't mind owning. So if you want to learn more about that, in the description of this video, there's a link to I Have Success. There is a website. It's like trading options for beginners. Beginners is in all caps. Check those out. And then somewhere throughout here, I'm going to put a link to a video, and check that out. Anytime I'm throwing links up, check those out. Let's get into these markets. So here is we're looking at weekly chart with 6 months of data over here. We see that the UUP dollar index, we see overall the dollar over the last 6 months is back to where it started 6 months ago. Went all the way up, was above the 200-day moving average, and broke below it. 200-day moving average is sloping up though. TLT, which is representing 20-year bonds, still below that 200-day moving average. And we see it's kind of it's down lower than where it started, where it was 6 months ago. Gold contract futures price. I'm not going to explain it right now, but if you want to have a little bit of learning, figure out the difference between the physical price of gold and the futures price of gold. But it's over that 200-day moving average, and we see it was under it for most of the past 6 months. And for 1, 2, 3, it's 4 weeks. 4 weeks, about a month, it's been over that 200-day moving average. Oil, WTI crude oil, below that 200-day moving average, sort of in the whatever time period that was, and it's been below that 200-day moving average, although it rallied up, came down. And Bitcoin, wow, look at how steep that 200-day moving average is, and it's just consistently doing this for a long time, kind of stepping down. The VIX, the volatility index, the fear meter, oh, look at that. Is that going to be a W pattern? It just kind of going up and down below that 200-day moving average, wavering on that. And right now it looks like we're kind of building this base at 20. But I don't know if technical analysis really matters the same way to the VIX, because basically the VIX is based off this SPX. So speaking of SPX, pretty steep downward trending 200-day moving average, not as steep as Bitcoin, but we see, looks like we might have an M formation here, right? And look at the left side, significantly higher than the right side. Ooh. If we break past this down here, this pivot area right there, a little bit of support, maybe it's going to really go down. Dow Jones, downward trending moving average, and tested it right here, broke above that 200-day moving average here, but pivoted here, kind of got back to this sort of 340-ish area, and right now we'll see in the next couple weeks if it's going to hold over that 200-day moving average, which with the other three indices of the stock market all really sloping down. I don't know, a lot of weight pushing down there. NASDAQ, steep decline in the 200-day, and looks like possibly have an M going on right there. Price pivoted here. We see that around that 12,000 area right in here, it was acting as resistance, broke up, became support, but crashed through. Now it's a resistance again, and looks like we got another area of support right here. We'll see if it's going to break through that. Russell 2000, same thing. We got that downward sloping. So overall, it seems like we're still looking fairly bearishly. Let's take a look at this real quick. I'm gonna fly through here. I forgot to add on one different sector. So anyways, we're gonna look at 11 out of about 12 sectors of the stock market. And let's just make this fast by looking at the 200-day moving average. So technology down below the 200-day moving average. Healthcare above the 200-day moving average, with it kind of moving sideways. Financials, right under that 200-day moving average, and we got a pretty steep decline on that 200. Industrials above the 200 with a fairly, not too steep, but it's a downward trending 200-day. Same thing with basic materials, downward trending 200-day moving average, and right now broke below that 200-day on the bottom side of that. Energy on the top side of the 200-day with it at a fairly good pace, fairly good steepness going up. Consumer discretionary got a strong downtrend in the 200-day, and price action just staying below it. Consumer staples, basically kind of like a sideways moving average, and price action is on the top right now, but it's testing that. The next couple of weeks, we'll see what happens. Oh, utilities kind of got like that. Also got that sideways moving average going, 200-day moving average going on, and price action is on the bottom of it. Was on top, failed, came down. Real estate, pretty steep decline on that 200-day moving average, and price action just staying on the bottom side of that. Same thing in retail. Price actions really just on the back end of there. Let's take a quick look at the calendar for next week. Cool. So right now I only have economic data listed. So we got retail sales that will probably be talked about. Dallas Fed manufacturing survey, that'll probably make some news. This will probably make some news. House price index. Obviously all of it makes news, but some of it makes a little more kind of mainstream news. Farm prices, Baker Hughes rig count affecting oil, jobless claims, that one's normally pretty well talked about. Fed balance sheet, they're probably cooking the books. They probably got the balance sheet in the kitchen with them, cooking it up, but maybe not. And so however your trading style is, whatever you're going to be doing for your trading investing, if you need to pay attention to the stuff to be on top of it, then pay attention to it. Also, you can see if see how that's coming off. Those are different earnings reports. So if that's relevant to you, for certain stocks, or you're going to do earnings type of things, you need to pay attention to those if you need to. Well, speaking of that, economic news, interest rates have been the pretty big driver of the stock market for a while. Maybe it was before 2008, but definitely 2008 afterwards. It's like how easy can people get their hands on money to goose up the stock market has really driven the stock market up. So without going into an explanation of what each one of these are, just realize all of these with a green, it's a line chart of 1 week looking at 1 year of data, and they're all various time lengths of treasuries, and you see they've all been going up over the last year. This one right here is the 10-year treasury, and this purple line is SPX. kind of representing the overall stock market. So we see that the interest rates have been going up and the stock market has been going down. These are ETFs that track different time durations of treasuries, and we see all of those. So basically, when the value of your treasury or a treasury is going down, they have to raise the interest rate, right? If you got to make it enticing for people to buy them, I guess, is basically how that goes. And the last thing that we will look at is we'll go do this really quickly. So let's take a look at the monthly chart. We looked at weekly charts. Let's take a look at monthly chart here, but not for Bitcoin. Let's just hit up the main indices. Okay, so we got our 3-month daily, 1-year weekly, and 3-year monthly. So the monthly chart, right? The weekly chart, we see it right in here. Monthly chart, we see over X amount of time, it was above, SPX was above the 200-day moving average. Around the beginning of 2021, it broke below that 200-day moving average and just basically been in this bull market right here. But this candle right here, closing right here, opened here, right? Without this candle, we would have been, without these two, we would have been continuing this like real smooth channel to the downside. So what might be happening, we'll see how next month, how that candle starts playing out. But I think it's possible that we might start just kind of building, catching some support and resistance. But if it, looking at this one, it looks like it's already breaking down. So we'll see. But yeah, definitely I don't see anything bullish there looking at that monthly. How about you? You see anything bullish? Now here, at least that is a little bit bullish, but look at this, boom, up, right? We see it kind of, this candle broke that trend, but now we're right back here, but we're still out on top of the 200-day moving average. Testing it, it's looking relatively weak, but maybe it'll start getting some support right in here. NASDAQ, look at that, just really following that 200-day moving average, going down. You see it in the weekly. Russell 2000, it looks like it's building some momentum to go sideways. So wouldn't be surprised if we see a bit of a sideways market, which I think I had been. I know on some videos I was talking about that sideways market when we're looking at this. Okay, this is the S&P 500. SPY, we see beginning of the year, start going down, kind of staying in this channel. Tested at the top here, tested the top here. We're testing it again, and we're basically waiting to see if is it going to go below. But you notice it was relatively smooth down to here. But in this area, it's kind of been doing a lot more jagged stuff, right, all through here. And you look to the left, you see it kind of get caught in there. So I wouldn't be surprised if it stayed in possibly a wide range. Like the smaller range would be maybe about 380 to 390, 380 to 400, somewhere in there, and then down lower, down to like the high 350s to maybe somewhere around the 420ish, somewhere in that range. I wouldn't be surprised if it kind of stayed range bound and really volatile, going back and forth to the up to the top of the range and back, or tighter in that. And then another thing, I wouldn't be surprised if it breaks down and ends up breaking this basically 357 is where these 2 points are right here. If it breaks that and just really goes down lower. The thing that I would be most surprised if it went into this bull trend, Now, I wouldn't be surprised if it went into a bull trend if the government, the Fed, whatever, you know, they're all in the same family. If they start doing some sort of something, no matter what name they call it, no matter how they make it sound different, if they're doing something that basically emulates the results of quantitative easing, Operation Twist, not QE, whatever they call it, if they do something that's pushing stock markets up, dropping interest rates, making easy money, doing whatever they do, then I could see that. But without doing something like that, I don't think we're going to have this type of bear market for a while. With that, my friends, please remember, go check out ihavesuccess.com if anything in there might be interesting for you. Please, if you feel like it, introduce yourself in the comments. If you potentially want more pals around the world to talk charts with. You guys have a fantastic Christmas, New Year, all that type of stuff. Aloha.